Cash machine number 6, the continuity and subscription business model. The reason why this model is so powerful and so many different industries are implementing it is that it's really tough to gain a customer. If you know anybody in sales or if you've ever been in sales, then you truly understand how hard it is to actually gain a customer and the amount of time, energy, and resources that's dedicated to gaining that person. So it doesn't matter if you're selling a $20 thing, a $2,000 or $20,000 thing, it's hard to get a customer. So when you do finally land one, the idea is how can you keep this person, or how can you capitalize and maximize on the revenue that's generated from this person. And the concept of lifetime value, a customer's LTV, is where this thing comes in from. And if you have a car payment, if you have any kind of insurance, if you have any kind of subscription service like Amazon Prime or Netflix, or I think there's ButcherBox, and there's just so many of these subscription based, will ship this to your door kind of a thing, then you're fully aware of what the subscription model is like. And just to show you the basic numbers of how something like this would work, let's say you're selling a $500 item, but the person is now on a $500 subscription billing. So let's say it's a car, right? You sold a car and the person is now paying their car note, or you sold car insurance to a family that has several cars and now they're keeping their car note. So if you got one sale worth $500 every single month, in 6 months you would have a recurring revenue of $3,000. Now the whole catch, the caveat to this, is that they don't cancel their subscription and they stay with you. So it requires that you deliver exceptional service and you have competitive pricing so that people don't shop around and get buyer's remorse and cancel on you. But assuming that you got all that, then you can essentially bank on the fact that this person is going to continue to pay their monthly payment, and you're going to get this residual income coming in, and it turns into a machine. It turns into a cash machine. Finding out the lifetime value of your customer allows you to figure out exactly how much you can spend to attain that customer. So let's say they're paying only $500 a month or $200, whatever the amount is. So let's say $200 a month. Let's say they're paying $200 a month, but you know that their lifetime value is $2,000. So if you know that, that means that you can afford to lose something on the front end. You could spend $400 to attain this customer, even though on the first month you're technically taking a loss, and on the second month you would only break even. But you know that the lifetime value is $2,000, so you can comfortably spend $500, $400 to attain this customer, because you know you're going to get your money back and then some. So then the only question becomes, how quickly can you spend that money to attain these customers? And this is what is really cool about the subscription continuity model, because it has that feature. Somebody buys once, but their value over a lifetime is a certain amount of money, and now you know how you can promote your business and how you can attain your customers. And a quick little side story for you, there was a time where there was something called America Online, AOL, and Spectrum, Time Warner at the time, was going to buy out everybody in the market, and they were trying to take over everything, and so they bought all of AOL's customers from them. But the LTV, the lifetime value of AOL's customers, were I think $150, something like that. But Spectrum, Time Warner, ended up paying $250 per customer, not knowing that they're actually spending $100 more than what the actual customer was worth. So they took a really big hit on that transaction, but they're gigantic, so they could afford a loss like that. And the loss was in the billions of dollars, by the way. So knowing this, if you want to go buy somebody's customer base from them, make sure you understand and really do your due diligence to know what the actual LTV of their customer base is before you spend that money, so you don't take a loss in the long run. Now, there's obviously a lot more minutia and details in the continuity model, and it's all covered in the chapter for continuity and subscriptions in my book, Cash Machines,